Is everybody ready for Bitcoin is DeFi?
Laser. Fancy.
Okay, so I'm especially excited that we're here today, not just because it's been the pandemic for a year, because I'm told that this is the first time in the history of any crypto conference that we have a panel on Bitcoin DeFi. So congratulations, gentlemen.
DeFi is coming.
To break or something.
Yes, we've had a fucking crazy year for DeFi in general, and now is our chance to say why there's a space for Bitcoin at the table and what all of you distinguished guests are going to do to get us there. So I think we're going to start with just, Jeremy down the line. Maybe each of you can introduce yourselves, your project, and then why did you pick Bitcoin to one of the many other alternatives for more popular DeFi platforms?
Yeah, all right. My name is Jeremy Rubin. I am a Bitcoin Core contributor for the last several years. Before I was doing that, I started the MIT Digital Currency Initiative and scaling Bitcoin. I've just generally been involved in the Bitcoin community. Currently, I'm building Sapio, which is an on-chain smart contract programming language for Bitcoin, kind of like, we're not supposed to say Ethereum, but the Solidity for Bitcoin. So that's going to add a lot of functionality. I chose to work on Bitcoin because when I got into it, there wasn't anything else. So nothing but Bitcoin, and I've kept true to that agenda for the most part because I think that decentralization is key, and Bitcoin is one of the very few projects that has kept that keel even in trying to make sure that we're bringing an asset for the entire world away from political control.
I'm Edan, Iago. I've been in Bitcoin, like many of the people on this panel, for a long time. And I think I got on to Bitcoin for the same reason that many of you are here. I think the reason we're here is because we're interested in creating a borderless, transparent, and most important, permissionless and incorruptible form of monetary future for ourselves. But a monetary future is useless if you have this pristine asset, right? You've got Bitcoin, which you can completely control unless you want to do something with it. You want to lend it, centralized intermediary. You want to trade it, centralized intermediary. You want to create derivatives or financial products, centralized intermediaries. Bitcoin is not truly decentralized, hasn't accomplished its goal until we have the second leg, right? Which is ability to perform financial and economic transactions without intermediaries in an incorruptible way, just like Bitcoin. And so I don't think this should be a new panel. I think this is where we were always going, and finally we have the technology which is making it possible.
Well, I think I got into Bitcoin for the same reason Edan got into Bitcoin. It's basically, Bitcoin is the ultimate DeFi protocol. It's the most decentralized protocol in finance in the world. So we are just extending its capabilities to take it to a new level where we can do everything in a sovereign way, as Edan was saying. So this is about that. It's like DeFi is just the first Bitcoin is just the first layer of DeFi. It's a store of value that is incorruptible, is neutral, is open, global. That's what you need at the foundations of a true DeFi ecosystem. And what we are building now is the extension of that foundation to create the financial system of the future that will also enable to regain the control of the internet and create a truly peer-to-peer internet of value and information. And that's why I choose Bitcoin.
Hi, my name is Oswaldo, Lairet. I've been in banking for 40 years. I started in 1981 as a derivatives trader for Citibank. And then I ended up in New York managing most of Latin America, fixed income, foreign exchange, all kinds of spot markets and derivative markets. And that's what I know how to do. I've been trading fiat for my whole life. So when Bitcoin came along, I had to take a look at it. It was an impressive thing because I've been looking for something like that for the last 20 years. So I had to vet it, and I did. for like 3 years until I finally felt comfortable with it, and I put it into our hedge fund together with stacks, which I'll talk about later. So anyhow, what I was looking for was a non-systemic asset. I believe that everybody else out there thinks that SOV is a big thing about Bitcoin, store of value. Yes, that is a good thing. But guess what? The real thing is non-systemic. The first time in the history of humanity that you have an asset that cannot be confiscated after the monetary collapse happens. Gold has been confiscated for the last 2,500 years. So gold ends up not really being non-systemic. In the end, it is systemic, because if the nation state can confiscate it after it collapses, guess what? It's still an asset that can be taken over. For the first time, we have a non-systemic asset, truly non-systemic. It's not going to go bust when the collapse comes. So that's why you want to have it. But guess what? We need to build decentralized finance infrastructure on top of it. And that cannot be a compromised structure. It cannot be built on a gas token like ETH. Why? ETH has no limit for printing. It has a human team that can be coerced. It has everything that fiat currency has. It's just a repetition of fiat currency. Why would you have a non-systemic asset in the hands of a compromised smart token? So that's why I went to Diego back in 2016, Diego and Sergio, and we were looking into ways that they could develop an app that I wanted to present to the big multinationals that I work with. And we had a similar thing going on for years.
I think we can, I've heard this story before.
Okay.
I think we need to all hear it over drinks because it really is that epic. So I think we will have something like that. The audience can join. I promise it is a good story, but we're at about 20 minutes. So I did want to move on and say that even though there's just so much excitement around Bitcoin DeFi in general, there's still a long way to go to catch up with the rest of the DeFi space and making the world embrace open finance. And so to that end, my first question is, what's keeping Bitcoin DeFi from rivaling DeFi on Ethereum or on these other platforms in terms of development, usage, adoption, popularity, and fast innovation? And so a couple of the panel members and I spoke earlier, and we broke it down into a few categories. Jeremy, I actually wanted to ask you about the technical constraints.
Yeah, sure. So when you look at the difference between the Ethereum ecosystem and the Bitcoin ecosystem, there are a lot more modules in ETH that you can kind of rely on and have it kind of be external to your own responsibility. So this isn't necessarily a good thing in all regards. These are things like MetaMask or Infura or Web3 API. What that enables is if you're a builder, there's a lot more that you can just say, hey, you know what, I'm going to use this, I'm going to use that. You pull it together, and you've got something that is at least a little bit usable for most of the ETH community. In Bitcoin, if you're trying to get traction for a new project or application, it's basically up to you to build all the scaffolding yourself to get everything together. And so you have to do a lot more to achieve escape velocity with a Bitcoin project. It's not necessarily that it can't be done. There are some technical limitations within Bitcoin on-chain. Obviously, sidechains get into addressing some of those issues. But Bitcoin is a much more limited execution model because it's designed to be long-term much more scalable. And so we are much more constrained with what is technically allowed inside of Bitcoin Core consensus. That's another issue that comes up as well.
So you would say for those of us who are more investors in this space and less in tech that the technical infrastructure in Bitcoin doesn't yet exist for making something robust like Ethereum?
It doesn't exist yet. I'm working on that, building composable infrastructure that anybody can pick up common standard components that achieve various smart contracting goals in Bitcoin and just roll with them. I think that that's going to be available relatively soon. I'm hoping to accelerate that and build more momentum in bringing that for standard practices for Bitcoin. So I think that that's coming, but it's just not quite where ETH is in terms of that community managed infrastructure. Those are things like, if you want to be on Uniswap, for example, you implement the ERC20 interface, and then you can tap into a lot of other work that people have done in terms of order books and exchanges. And for Bitcoin protocols, there's just not that level of like standardization and components that you can just rely on. But I think we'll get there.
So I think it's a myth that it doesn't exist. The future is already here. It's just not evenly distributed. If even someone like Jeremy doesn't fully recognize that it's here, then we have some educating to do. But the work that you're doing with Judica is extremely important as, I think, a primary component for primitives like pegs, for example.
Yeah.
But I don't think we ever want to build DeFi, a financial system, on Bitcoin main chain. Bitcoin main chain, the beauty of it is its simplicity. And that's what provides it with consistency, reliability, and a high degree of scalability. That said, there are Bitcoin sidechains, and I think, there are two representatives of Bitcoin sidechains right next to me right here that provide all of the functionality that you could ever want. So you can run any Solidity contract today on Bitcoin, pay with Bitcoin, secure it by Bitcoin proof of work. And not only that, Bitcoin DeFi as a result already exists. So I've been contributing heavily to a project called Sovereign. Sovereign provides a financial layer to Bitcoin. It currently manages over $1 billion in assets. It launched 53 days ago. It's currently growing faster, has exceeded the size of assets and transaction size that is occurring in the publicly available Lightning Network, has thousands of users, and is accelerating. And the reason is because Bitcoin is the center of gravity for the entire space. It is also has the community which is most interested in decentralization. And I think the natural fit, now that we have the technology, we have the products available, is driving very, very fast growth of Sovereign and similar projects. So Money on Chain, another project with over $100 million in assets and daily transactions exceeding millions of dollars.
I think one, if I can add, there's a trilemma in decentralized networks between where you have to choose one, or every decision you make is by sacrificing other aspects, where you have security, scalability, and functionality. So if you want to have maximum security, you need to sacrifice scalability and functionality. And that's what Bitcoin did. Bitcoin is a push-down automata. It's not a Turing-complete environment. It doesn't have a state. Every transaction doesn't have a memory of previous transactions. Those are sacrifices that Bitcoin did to be the safest decentralized network in the world. And the objective is not to change that nature, because if you want to have digital gold, to have trillions of dollars under management in a network, you want those decisions to be made, to sacrifice everything else. In layer 2, what we did with RSK is basically sacrifice a little bit of security, but we provided more scalability, and also we provided full functionality. A general purpose programming environment like Ethereum did, and indeed you can port any Ethereum smart contract into RSK and it will run without modification. So it's the same environment, you can use it. And then you have layer 3 protocols that are purely peer-to-peer and use layer 2 for economic coordination that are extremely efficient. Indeed, Sovereign is working on porting a big part of their operations into that layer 3, where you actually maintain one of the more important principles of decentralized networks, that is the ability of the end user to validate the state of the network without relying on third parties. And so that's why we also don't want to blow the blockchain or do everything on the blockchain. What we want is to only use the blockchain to anchor very specific settlements of states, do economic coordination when some of the parties are not fulfilling their duties. But it's something very precious, and I think Ethereum ran into a bottleneck because they didn't value that aspect of it enough. They let the blockchain blow to a point of no recovery. That's why Ethereum is moving into Ethereum 2.0. They have no recovery for the network. And I think the Bitcoin DeFi ecosystem is going, with that experience, is actually avoiding the bottlenecks that Ethereum had. And that's why I think Bitcoin will take the lead on DeFi as well.
So the second, oh, do you want to say? Okay.
So one thing I want you to take away from this panel is basically in the world of finance, the way you analyze securities is two ways. One, you do it by treasury risk. There are 4 types of treasury risk you look at when you're designing a brand new security, like credit default swaps, or optionality transactions, or volatility plays. Whatever you're working on, you need to take a look at counterparty risk, which is basically credit, liquidity, and settlement. That's what composes it. Then you look at sovereign risk. If you have a deflationary currency, that's a sovereign who's defaulting. Or if you have debt restructuring, that's sovereign risk. And then you have systemic risk, and that is the possibility that the whole financial world gets caught in a domino move like they did in 2008 and basically went bankrupt. And then they were saved by the Federal Reserve. So you look at those 4 types of risk, and then you look at NPV, net present value of an income stream. So if you look at fiat and you look at securities of any type that are issued in fiat, like, does anybody want to hear this?
Babe, we're talking about sidechain, on-chain, you know. Just to get us back on track. Your part's coming. So the next thing I wanted to talk to you guys about is, of course, there's a lot of reluctance within the Bitcoin community to even engage in creating alternate tokens to fund developers, to fund their own foundations. And yet, of course, the broader DeFi community has sort of exploded in popularity because they've had these resources. So I actually wanted to ask you guys, because you did each go ahead and issue independent tokens. In one case, it wasn't actually necessary to pay as a form of gas. It was actually denominated in BTC. But I would love to get a sense of your overall views on, you know, Bitcoin community's philosophy on tokenization and whether that is actually a good thing so that we can get our projects funded and developed quickly.
Yeah, I think there's a very big distinction between cryptocurrencies, right, Bitcoin, and tokens, which can be anything. They can be an NFT, they can be the ticket to enter into this place, they can be a share, they can be a bond. Now, Bitcoiners over the years have developed a very, very deep suspicion of any type of token, because up until now, pretty much every single token out there was a shitcoin or an altcoin. It was something that said, look, Satoshi invented money. I've been working 9 to 5 for years. I didn't know you could do that. I also want to make money. So I'm just going to copy Bitcoin, and I'm going to give it a new brand name. I'm going to say it's got a clever new feature, and I'm going to go to a conference, and I'm going to meet other people who have also invented currencies, and we're just going to swap currencies for each other. And this seemed silly to us. So there's a fundamental aspect to Bitcoin that it's not a technology, it's a currency. It's designed to be sound money. And what we want is we want a world which is built on incorruptible money. The term we use for this is hyper-Bitcoinization. But for a hyper-Bitcoinized world, what we need is we need the entire financial system to be able to integrate with that. That means that mortgages should be tokenized. It means that equity should be tokenized. It means that we can structure our lives either through decentralized internet or decentralized finance in a way in which we don't need intermediaries. The number one intermediary we all have to deal with are the governments and the courts. And so when we created Sovereign, we thought carefully about how we were going to structure it, how we would fund it, how we would create incentives to build this future of decentralized finance built on Bitcoin. And it was clear that we didn't want to create a company which would rely on the courts of London or the courts of the United States. Instead, we created a token which represents the ability for people to collaborate around developing the system and to earn the fees that are driven by the system to earn Bitcoin. And for that purpose, the SOV token was created. And what it effectively represents is the future of what happens after we no longer have to deal with shares, no longer have to deal with equity. It's the future of having the ability to coordinate incentives between peoples secured by Bitcoin rather than by courts of law in different countries. And I think that's the future that is that is exciting to me, a future in which we no longer rely on these intermediaries because property rights secured by cryptography are more secure than property rights secured by governments.
Yes.
So Diego.
I think I don't have much to add. I think Edan takes the word out of my mouth. So, because we think very much alike, I think if I want to synthesize what Edan said, is like tokens are an economic coordination means. It's like when you have multiple people that, Bitcoin is a reserve asset. It's like, as I said, it's a neutral standard for money, something that doesn't have any political sign. But sometimes you need to coordinate smaller economies, and you use these tokens to actually coordinate the activities around those economies, and also to provide benefits to those who believe in that particular economy. So Bitcoin is a reserve asset to become like the reserve asset for the world, not for a particular economy. So tokens are needed, and I think we are going in two ways, in two directions. We are going into the hyper-Bitcoinization Edan was mentioning as a reserve asset, but also we are going to see more and more community currencies emerge because communities want to have this buffer where their local currency is attached to the economy they generate, regardless of the macroeconomics. So you will see that like the two things happening is like hyper-localization and hyper-globalization through Bitcoin. So I think that's my view on it.
And Jeremy, I believe you've had some views on governance tokens on Uniswap.
Yeah, so I think that by and large, a lot of the tokens on these protocols as sort of like a notion of like ownership over what happens. I think that there's, at least from my perspective, a worry that a token sort of represents some sort of rent in a protocol, and free markets overall eliminate rent seekers in the long run. So I think that the freer our ecosystem is, the less rents there will be to extract. And I don't think that the token models long term will see themselves out. If you had, for example, some governance token that's accruing trading fees to some group of token holders, the token holders that should get it are the ones who are providing liquidity. Nobody else should be getting that rent. So I think that overall that type of thing is going to, over time, erode. Now, where I think there's maybe an arbitrage is there's a window for these things to exist, where if your project needs funding, maybe there's a use case for saying, okay, well, perhaps we'll find a way of having sticky value that people will need the token in the long run. But I think tokens kind of represent a monopoly over something, and if the market is free, then those tokens will lose value over time. That would be kind of one of my core views around the governance token model.
But you would agree that the same can be said about equity, right? So equity is the ability to extract rent from some kind of company.
Well, yeah.
Right?
So I think I do agree in theory with equity. The difference with an equity, and I think there's a similarity, is like you're collecting a dividend over time while the company is more profitable than competitors at providing a service. So the firm is able to look at the supply and demand and say, hey, look, we have a profitable opportunity here. We collect money. So you own it for that reason. And the thing that I think is a little bit different with the equity is that when you're fundraising, you're really fundraising to initially do those services with the equity. Maybe it's inventorying real world goods. To the extent that a token is accomplishing that, then yeah, maybe it can function more like an equity. But to the extent that a token is a different thing than an equity, which I do think there are tokens that can be equities. That's a different category. But the sort of token that's not an equity, I have a little bit of a side eye for.
Like a utility token.
Yeah. I don't like. I would believe in like an equity token. The utility token I don't think is like required for anything.
I'd agree with that.
I wanted to finish what I was saying. Basically, we call this panel because I want to make sure that Bitcoiners are aware that Bitcoin DeFi is a priority, so that non-systemic assets like Bitcoin, the only one there is, cannot be built on a platform of smart contracts that are systemic. Because if they are, then I, as a financial person, can now build a cash flow income net present value from here to the future. If I look at all the income streams coming from Bitcoin, let's say from stacking in stacks or any other form of Bitcoin stream. I have to be able to have one type of risk only, non-systemic, all the way out. So I cannot build a yield curve, I cannot build optionality, I cannot build lending and borrowing if I don't have that non-systemic platform to build on top of Bitcoin. And that's why I started working with RSK and then Liquid and finally with Stacks on building a truly non-systemic smart contract platform.
Thank you. Thank you, Oswaldo. Saving the best for last. Okay, so I have, I guess, well, there's 1.5 last questions. A lot of people have been asking me to ask you guys about yield farming. It's of course, the most popular thing right now. How can you actually earn yield on Bitcoin? How safe or unsafe is it? Let's hear your real thoughts.
Yeah, I think lending Bitcoin, earning some yield on Bitcoin is definitely something that we're going to see evolving in the future. I don't think that there are tremendous options right now for that. The sort of most robust, purely decentralized one is to do routing of liquidity for the Lightning Network. You can earn routing fees on that. I love the Lightning guys. They're in team. They're somewhere out there. But I think it's just a really competitive market long term. So I worry that that's like not going to be a particularly high yield product for people. And it's sort of antithetical. Like if you're paying an ongoing interest rate, that interest rate has to fundamentally be lower than if you just did the transactions without a layer 2 protocol at all. So I think that's a very competitive market. But I do think that as time goes on, some of the stuff that I'm working on pertains to contracts that exist actually, squarely within the walls of Bitcoin, where you could say insulate somebody against a price change against the dollar, and you could collect some premium on that and have pretty minimal risk on your actual Bitcoin. So I do think in the future people are going to be able to earn Bitcoin by using their Bitcoin in maybe low risk products, providing value to other users of the network.
Yeah, I mean, there's no question you can earn yield on Bitcoin. You go to BitMEX, you go to Bitfinex, you go Binance, and their funding rates will pay you sometimes absurd amounts of money on your Bitcoin. They'll pay you more Bitcoin on your Bitcoin, but you're taking counterparty risk. Right now, on Sovereign, you can do the same thing without the counterparty risk, and because the protocol is very, very new, there's also liquidity mining incentives which are making it ridiculously, stupidly profitable at the moment. It's not going to remain this profitable forever, but yield on Bitcoin, 100%, we know there's product market fit there. We know that the one issue that it had was counterparty risk, and we now know that on protocols like Sovereign, you don't need the counterparty anymore. So I think it's a no-brainer.
Right. So we had one more minute to go, and I would want to ask one of you guys to just tell us what can the ordinary DeFi space learn from Bitcoin? And it better be a good one.
What?
What can the ordinary DeFi space learn from us in the Bitcoin community? Just one person.
So what is the question?
What can DeFi learn from Bitcoin?
So what can DeFi? Well, I think what DeFi can learn from Bitcoin is like decentralization is a process, and if you really want to protect what you are building, you need to be careful with that. You really need to protect the decentralization of your ecosystem. If you look at Ethereum today, all the access points are centralized. Like every application is using Infura. Nobody can run servers, nodes for Ethereum by themselves anymore. So you have 2-3 companies offering access to the blockchain that actually control the network. Infura went down, and 70% of the exchanges in Ethereum went down. That's the level of centralization. And that's not a problem maybe today, but if you really want to start like creating a global financial system and start competing with the nation states on this level, they are coming to you, and the first thing they will do is go to those points of centralization. So really, Bitcoin has kept decentralized and increased its decentralization over years, more and more and more. And if we really want to do DeFi, we want to honor the decentralized part of the D in DeFi, we need to keep pushing for that. It's not just using it as a buzzword. It's like, and every protocol has some certain points of centralization. Some of them need oracles. We are working on decentralizing oracles to make them more reliable. Only a few DeFi protocols are truly decentralized, like Bitcoin, no? So we need to keep that in mind. We need to keep that decentralization is a tool to protect this new financial system we are building for the future of humanity.
Amazing. Thank you so much. Round of applause for our panelists.
Thank you.